Hi, good evening, everyone. Welcome to our section today where we're going to spend 45 minutes together to understand some of the simple ways how to buy low and sell high. My name is LP. I'm your presenter for today, and thank you for your time joining for our section today. All right, okay. So let's start our section today. Okay. All right. So before I start with the sections, as usual, we're gonna go through this disclaimer. Okay. So today I'm gonna share with you some of the live examples that we've been through. That some of these examples I actually guided through my clients, or personally I traded it. Okay. But today it will be more towards the my opinions and serve as a general information and also education materials to help you guys to understand how to utilize these methods to trade it, okay, using the method that I'm going to share with you guys later. Okay, so if any of the recent example, it shouldn't be taken as a recommendation to buy or to sell. Yep. Okay. So if you want to like really take some action on the stocks that we mentioned, so okay, do feel free to open an account with us, and then we able to share with you guys some of our ideas or opinions, or you can check with your investment advisor or your broker accordingly. All right. Okay. So so our topic today is buy low, sell high. And I do believe everyone in this market, they want to buy low and sell high. But to be honest, who in this world they can really buy low and sell high? Yeah. Sometimes we able to buy at the almost the lowest point and even sell at the high, but to put into practice and do it consistently, it is not easy to do it every day in, day out. This is mainly due to markets is driven by emotions. Okay, every one of us, we have emotions when we are trading, and also inevitably we will tend to have this herd behavior, whereby when everyone is buying, when especially when the stock is so hotly discussed, widely been traded, everyone been talking about it. This herd behavior that built into ourselves, it actually activated and encourage us to join into it. So instead of buy low and sell high, we become buy high, and hopefully we're able to sell higher. But sometimes, or many times, many traders in this market, they will end up with buy high and sell low. Okay, all right. So that's one of the things that has been really happening to most of the retailers in the markets. Okay, and of course, with the rapid price swing that has been swing up and swing down, which cause us confused and also don't know where the market is going, that actually makes buying low and selling high even difficult. Okay, so how we can overcome all this issue that we mentioned, for you guys, I have put up 3 M's to look into it, to attend into all these problems that we just mentioned. And the first M that we're going to talk about is the trading methods. It's one of the key M that beginners, they will have to like really emphasize, because if we come into this market without any methods, it's basically hard to move forwards. Okay, so this first M is very crucial, very critical for beginners. Okay, but as the time goes, money management and also traders mindset, it will become more critical as the time passes. Okay, but first, trading methods. By having a consistent trading method that you are familiar with, that you're convinced with, it actually able to reduce all these emotional distractions, whether to get in or to get out, whether is there any hesitations, whether should you be holding longer or should you be exiting. So all these problems will able to be solved. Okay, and it will actually help you to be consistently taking advantage from the herd behavior that we mentioned just now, that actually been losing money all this while. Believe or not, there are more than 80% traders worldwide, they are losing money day in, day out. Okay, so hopefully with our section today, we will able to help some of our traders here to be to able to exit and be part from the 20% that profitable. Okay, so once you're able to once you have a consistent trading methods, next you really have to look into is money management, risk management methods that able to help you to hold and trade through your strategy. Okay, and of course, the correct traders mindset that enable you to make all these correct decisions, or in other words, to avoid making some of these silly but painful wrong decisions when you're trading. Because in trading, we know every decision is made in split seconds. Okay, yeah. So building the mindset and also build formulating the correct SOP is crucial, is critical for a trader. Okay, in order for them in that split second, they're able to produce and also make the correct decisions. Okay, whether to buy or whether to sell or whether to cut loss or whether to take profits. Okay, so today our section to right over here, we will go through all this um all this uh all these solutions or all these subjects that we have put up. We will discuss about the traders mindsets, especially what kind of mindset that has been in traders minds, in all these participants when the market is bottoming or at peak. And of course, we'll go into looking through some of the tools, some of the methods on how to identify the top and the bottom. And finally, we will go into the real executions on based on some example, how should we trade it and how we could manage our risk soundly. Okay, and if you have any questions in between, do feel free to type into comments and I will attend to it as we come to the last section, which is Q&A. All right, okay, so if you have any questions, if you want to know the view of the stocks, whether it's an uptrend, whether there is any sign of bottoming or picking on these stocks, we can definitely discuss in throughout the sections. All right, okay, all right, okay. So let me start our section with the very critical and crucial questions that everyone has been the reason why you guys are here. All right, so where is the bottom? How do we identify that this is the top? Okay, when you look at the price chart, when you look at or the price itself, how do we know that this is the bottom, or how do we know that this is even the top? Basically, there's no way to know, right? When does one can recognize the low is the bottom or the high is the peak? We wouldn't know until the market tells us so, and that would be after the low has been formed and also the high has been the high is already there, meaning we are trading lower than the high. Then only we know, oh, so that's the high for the price for this period of time. Okay, so then you might have this question, hey, okay, then you are bluffing to me and I'm just wasting time right here listening to you because there's no way we can buy high or sell low. Okay, yes, there's no exact way that we can buy high or sell low, but there are early signals and also some indications, some indicators that can tell us whether the tops or the bottoms are forming. Okay, so at least there are some signals that we can briefly know, okay, this could be potentially the high or could be potentially the low is informing, and this could be a good time that we might really want to get some positions or exit some of our positions. And that would come to your strategy, how you manage your position and your portfolio. Okay, yeah, so it really depends on you, how you run your strategy, how you run your positions. Okay, but with all these early signals, it can help us to have a better management on our positions. Okay, yep. So the very first part is it's very important to know how the market's participants they think and their mindsets when the market is moving, especially when it's trading towards near the market bottom or the peak. Because in this market cycle, in the different phase of the markets, the traders that holding position that participating in the whole movement, they will have a different mindset. Okay, so maybe some of you guys seen this picture before. This is the emotions of market participants, whereby you can see that throughout the from the bottom to the peak, the up down of the markets, one trader that holding a position, their emotion swing can be like really swing from up to down, from hope to belief to thrill to anxiety to denial, panic, or even depressions. Okay, so this is really a whole cycle when the market is moving up and down, the cycle that could come into one's emotions. But today we are not going to talk about these emotions, but we're going to focus on something else, which is called Wyckoff market cycle. So what is this Wyckoff market cycle? Okay, Richard Wyckoff believed that market it moved in a four-stage market cycle. Okay, with this Wyckoff market cycle, it actually separates and identify each phase as what are the who are the participants and what are the actions that they are doing, and also the predictable movement that could be done. Okay, and this market cycle it repeats over and over again, regardless of the timeline or time range for each phase. Okay, so for all these phase, it can happen in very quick few days time, or it could happens in like months, weeks, or months, or even years. Okay, especially for accumulation phase. Okay, so basically this four stage is split into this four, which is accumulations, markup, distributions, and also markdowns. Okay, very similar to the emotion chart that we seen just now. It started with the market at the bottoming, okay, whereby the accumulation could happen up after a drop in the prices. Okay, so after the price has been accumulated and smart money have done with their accumulations, then slowly we will start seeing the price movements going into the markup phase, whereby this is the bullish phase that retailer will actually start paying attention and start monitoring on all these stocks, whereby the price is going higher and higher, and the shouts and noises are getting louder and louder. Okay, so the uptrend it will maintain as uptrend until we see a strong selling start occurring. Okay, that is the time that actually many would say that this is the distribution phase. Okay, whereby the sellers they are trying to get out, they are trying to maintain the price while trimming their positions. And once they are done so, from there we are seeing the market entering the bearish phase of the stocks, which is the decline phase. Okay, yeah. So basically, after the decline phase and then the market fall flat again, then that's where the accumulation starts coming in again. Then the whole cycle it repeats over and over again. Okay, so basically today we're gonna focus on the accumulation phase and the distribution phase. Okay, we're not gonna talk too much about the markup, because the markup phase will be more towards using the strategy, especially momentum trading strategy and also trend trading strategy. But in order to, as we are talking about buy low and sell high, so we're gonna look at the accumulations, where the accumulation phase is where the buying low or the price bottoming could likely happen. But this accumulation phase is the phase that is least engaged by retailers. Why? You might want to ask yourself, if this stock is not moving anywhere, okay, if this stocks, let's say stock A is not moving anywhere, there's no volume traded, maybe one day it just moved half a cent or 1 cent and it has been slipping, not going anywhere, would you be spending time and monitoring it every day? Most retailers, they won't. And those who gonna monitor it, gonna engage in this kind of stocks, usually they will be the smart money. Okay, so during the accumulation phase, price action is likely to be range bound. Nothing exciting. It's just like the dead man heartbeat, one straight line. Maybe someday maybe beep a bit, beep a bit, up 5 cents, up half a cent, then down 1 cent, and then up another one half cent, like that. That's it. Okay, and during this period of time, usually most of the time the volume is low, but okay, this is the key here. Okay, but there could be some spikes in the volume in between of these. Okay, so later I'm gonna show you some examples. So the spikes in on the spike in volume, this is actually the gist whereby it is the signal that telling us that these stocks might have some accumulation activities. Okay, yeah, but whether how long this accumulation phase gonna be going through, no one knows. Only the smart money they knows. Yeah. Okay. So if for a retailers they want to engage in this accumulation phase, they really need to have great patience and also a very very deep pockets, because their money gonna be stuffed and we do not know when the market's gonna move from accumulation phase to markup phase until it tells us so. Okay, yeah, but of course, there are signals, there are indicators that we're able to spot it when it is moving from accumulations to markup, the transition of the phase, and that's the reason why you guys are here today. Yeah, because I'm gonna share with you guys later. Okay, and for the distributions, okay, of course, distribution is a phase whereby we could see the west, the as the share prices continue to trend higher, continue to trade higher, but with a slow momentum, with a low volume. Okay, and that actually telling us that distribution has been happening along with the rally. Okay, yeah. So because during that period of time, that is the easiest, that is the most convenient time frame for the smart money to distribute and get rid of their holding. Okay, but yet these are the time where the retailers, they are really actively traded, and most of them they are jumping in because the fear of missing out, FOMO. Okay, especially when everyone's, or even the analysts, they might come up with say, hey, if this situation continue, we might see uh the share price can hit maybe like 5 ringgit, 10 ringgit, just like what we are seeing on the oil price. Remember 2 weeks ago, or even almost a month ago, they are talking about the oil price could go as high as $200. Okay, and after 2 months, even right now, the more P stocks are being held. We are still seeing the oil price hovering around like 80 to 100 for the US oil, and we are not even seeing $150. Imagine those who are chasing in high and buy at 120 because they are they heard the oil price could go as high as $200. Okay, yeah. So these are some of the tricks and um some of the words that been spread out in order to make the distribution easier. All right, okay, yeah. So that would be the accumulation and the distribution. So how can we identify when it's on distribution and when it's on accumulation? So, okay, Yeah, so next we're gonna look into it. Okay, so if you like our what we have been sharing so far, okay, do feel free to share our help us to share our video so that more can um see the video and also able to learn together with you guys. Okay, so first accumulations. Okay, this is one of the stocks that is I think it is still the top 50 in um our in the Bursa total market cap. Okay, is the top 50 largest or top 20 largest, top 100 largest. Okay, so you can see during early days of Tanko. Okay, uh, during early days of Tanko, we can see Tanko right over here. You can see, despite that the price is trading at 2 cents, is going nowhere. You can see the price range is like really minimal, is like really flat, like the dead man heartbeat like that. Okay, but from time to time we can see there are volumes, they are spiked and then come back, spikes and then come back. Okay, so these are the signal for accumulations. But you also can see that from here all the way until the move starting of the movement, just from starting right over here, it's almost 2 years. From December 2019 all the way until May 2021, only we start to see movement. Okay, but the movement from 2 cents it went to 6 cents and then it went to 11 cents, and right now Tenko is trading more than 1 ringgit 50 cents. Can you imagine that? Okay. Similarly, on Southern Cable, okay, despite that the share price has been moving nowhere, it's hovering between like 30 cents, 34 cents. Okay, it's going nowhere. You can see day in, day out. Okay, all these are daily charts. It's just 2 cents, 3 cents. Okay, the share price is going nowhere. We are still seeing high volume traded. Okay, and every few days we have a spike. We have a spike. Okay, quiet for a while, and then despite the share price not going anywhere, the spike in the volumes. Okay, and as it's traded higher, breaking up from this range, 30 cents to 36 cents range, we are seeing the active trading coming in. And eventually from there, we are seeing the share price easily up more than 50%. Okay. And for those who are actively trading at recently, you know where is Southern Cable price. Okay. Another example right over here, Microchip Bots. Okay, one of the very actively traded, hotly furniture stocks. But recently, due to furniture stock hasn't been really active and not they are one of the losers in this trade wars, trade tariff things ongoing. Okay, many furniture stocks hasn't been moving much. Okay, for the past few years. Okay, but back in 2019, 2020, whereby demand for furnitures all these are high, you can see despite that the share price is not going anywhere, they are on and off all these volumes build up. Okay, but like I said, the whole process could be lengthy. Okay, the whole process could be lengthy, and we do not know when it gonna start. Okay, yeah. As for distributions, like what we were saying just now, okay, for distributions the share price it can continue to go higher and higher. Okay, but you see the volume is diminishing, the volume is reducing. Okay, yeah, so this is the sign that telling us that the momentum has been slowing down. There could be the interest for selling is higher, okay, rather than the buying interest. Okay, and after that we are seeing a stalling for a long time between 70 something cents to 88 cents. Okay, with volumes for further distributions and the last round before the selling down in the next. Okay, this is one of the very typical example. Okay, uh, it has been my favorite education materials to teach the distributions, whereby you can see from March to May, okay, you can see the share price from 75 cents, it has shot up to 1 ringgit 25 cents, 1 ringgit 40 cents, and has been still moving up slowly bit by bit, okay, but you can see the volume has been decreasing, and every 3 days it had a spike, okay, which it could be due to the rollover of the positions, okay, yeah, and eventually when they done distributing or they just know that they just left little, what they're gonna do is they just gonna dump and dump, okay, they're just gonna dump it, okay, in and also in between. The interesting part is in between, as the price continue to go higher, many times they would try to dump and it create long tails, okay, long shadows or long tails right over here, okay. And why they are creating all these long tails isn't if they are selling so sharply, who are the one buying it back. So what happened right over here is they are the one who is throwing to sell down, okay, to sell down, okay, but they are also the one who are buying back up, okay. So in throughout the whole exercise, they might be selling maybe like 200,000 units, but they are buying back 180,000 units, okay, at even maybe at a lower price, because when they are dumping at the higher price, it could trigger some of the panic sell, some of the holders who holding the position, they panic selling as well, and eventually with the panic selling, the price got lower, they able to buy back at a lower price, okay. So net for the day, they are still profiting on the 180,000 units that they bought back. Meanwhile, they also able to distribute out 20,000 units that they intend to sell, okay. But the more important thing is through this exercise, it actually enable to convince all these retailers, all these people that are trading these stocks, that building into a mindset to them that every time whenever this stock sell down, it will able to recover. So you can see one time, two time, three time, four time, five time, okay. So you can see even in less than 2 months time, there were five occurrences whereby the share price dropped sharply, and at the near the end of the day, it recovered or even turned into green. So with so many all these occurrence, it actually built into the habits or built into the mindsets or perceptions to all these traders, all these retailers that been trading these stocks, that they would believe that every time this stock's been sold out, it is a buy opportunity, because at the end of the day, the share price could recover. They are somewhat supporting the share, the price, and it will turn green. So imagine after five times of doing it so, and during the six times when they are selling down, they are not supporting it, they are continue to sell down and down. Okay, what would happen to all these retailers that believe that the share price would rebound? In the end, they will be buying and buying, and until they really cannot tahan, then they might cut at the low. Then the next day they pump it up again. So imagine for those who really cut loss, and on the next day they saw the share price rebounding. You imagine that their emotions will be definitely, their mindset will be really screwed up. They might chase high, believing that hey, the share price really can rebound. Just that I cannot tahan for the day. The next day is rebounding already. I should buy. They will be chasing high, and in the end, they will be buying at the high over here, which eventually for the smart money, they will again sell to take profits, and maybe that's it. Okay, so this is how a retailer is being convinced to buy low, and also buy to sell low and also buy high. Okay, this is how the smart money playing with the mindset of the retailers. Okay, similarly on per cut, you can see the share price continue to move higher and higher, but the volume are coming down, okay, diminishing, and from there we are seeing that the share price started to trend lower. Okay, yeah. So after have a after understanding the accumulations and also the distributions, okay, um, after understanding the mindset, the how's the traders, the participants' behavior uh, behind of all these price actions, okay, then it comes to how we can more easily to identify, or in split second we can identify whether if this stocks or this counter is forming a potential high, potential top, or potential bottom. Okay, so there are three tools that I'm gonna introduce to you guys today, which is divergence, momentum indicator, and a momentum indicator, and also some price charts patterns. Okay, so divergence is like what I have been sharing on when we were talking about the distribution just now. It is price volume divergence, whereby we are seeing the volume and price, they are not moving in line together. By right, the volume itself, it must confirm the trend, whereby when if the price is trading on uptrend, the volume it has to be increasing together in line with the direction of the trend, which is uptrend. Okay, so for a trend to remain solid, remain strong, as the price going higher, the volume itself, it has to be increasing. Okay, yeah. So if we are seeing this, it's telling you that the trend remains strong, and the momentum is still there. However, okay, if the price continue to move higher, but we are seeing the slowing down in the volume, the declining volume, it's telling us that it might have it's in the it's indicating a potential reversal. It's telling us that the momentum has been slowing down. The buying pressure for these stocks has been fading, okay, fading away. Okay, just like what we are seeing right over here. Okay, so for Picard, you can see when it started to trade from 90 cents all the way to 1 ringgit 15 cents in an uptrend along above the 20 days moving average. You can see the average volume, it has been increasing and going up and up. Okay, similarly, after it's went into a sideways, stalling, some pullback, some profit taking, you can see the volume has been decreasing, telling us that all right, okay, the one who willing to sell, okay, the one who willing to sell is not as much as for those who are buying. Okay, many, they are still believing that these stocks could continue to trade higher, so numbers of people selling, number of sellers are lesser. That's why the volume for when retracing or during the sideways movement is very low. Okay, and as the trend continue, as the buying pressure continue to pick up, you would see the volume start to picking up again and getting higher and higher. Okay, the stronger as the price move higher. Okay, but one thing happened over here. Okay, on per cut. Eventually, after August 25th, okay, even though the share price continued to trade from 1 ringgit 50 cents to 1 ringgit 90 cents, we are seeing the buying interest, the trading interest in these stocks has been reducing. And we can see it very clearly from the volume, whereby you can see the average volume has been dropping from here and all the way down to here. Although on and off, we still see some long bars, but on average, you can see the trading interest has been getting lower, even though the share price has still continued to trade higher. Okay, so this is telling us that although it's still continuing to trade on an uptrend, but the buying momentum has slowed down, and this could be a potential top or potential high for these stocks in the near term. Okay, so this is a very critical signal for us to capture, and we might really want to reduce some of our holding if you are trading this per cut group at that time. Okay, similarly on Farm Fresh. Okay, similarly on Farm Fresh, you can see that the share price as it move higher. Okay, you can see in the Farm Fresh, the price volume divergence, it happened quite rapidly. like in between from 2 ringgit to 2 ringgit 40 cents level, although the share price continue to move higher, but you can see the average volume has been coming down. And with following that is the stalling and also the retracement in the share price. Okay. And but the retracement and the pullback come with a lower volume, which is healthy and telling us that okay, counter trend is it's good, and the uptrend could remains intact, whereby as it break higher, the share price break higher, break above 2 ringgit 50 cents with strong volume, the volume actually pick up. But eventually, as the share price continue try to attempt to overtake into a new high, we are seeing the volume actually drop drastically. Okay, even though we are still seeing new high being recorded at even at 3 ringgit, above 3 ringgit, the volume actually during the 3 ringgit level is way much lower when the volume traded when it was at 2 ringgit 50 cents. Okay, so this is the very clear signal telling us that the price volume divergence happens, and from there onwards, we are seeing the sellers has been taking into control, and from there we are seeing the farm fresh FFB price has been dropping from 3 ringgit all the way to 2 ringgit 20 cents, which is the recent low in April, like this month. Okay, yeah. So you can see as the selling momentum pick up, selling pressure is that we are seeing the volume build up. Okay, and right over here we are seeing the price volume divergence, whereby even with a stronger selling down, the volume for the selling is not building up, but it actually decreased. Okay, which actually indicate the selling momentum has slowed down, and that led to a recent rebound in FX. Some of the share, okay, at the potential and also bottoming level. Okay, for the divergence part, the price volume divergence. Okay, as for the indicator, the technical indicator, uh, momentum indicator MACD, or it's also known as moving average convergence divergence. So I believe many of you who have some basics in MACD, one of the most well-known and most common technical indicator that been widely, and it also one of the simplest and most effective momentum indicator. Okay, basically, what MACD is the indicator is using two MA line, moving average line, to build into a momentum oscillators that from 0 to 100 and give us the momentum signals, and this is how it looks like. Okay, yeah. So it oscillates in this area, okay, whereby the crossing below zero it indicates the zero is indicating the stock is trading on an uptrend, okay, and this blue line right over here is basically the MACD lines, okay, uh, subtracting the MA from a shorter MA. Okay, and the red color line right over here is the signal line, whereby one of the common ways to use it is identify the turns, whereby the moving average line turning below the signal line turning up, and all these bars right over here is actually the MACD histogram, whereby whenever that is a cross down, okay, that is a cross of the MACD line cross the signal lines, okay, then we will see the histogram is changed, okay, because it what it calculates, what is indicates is the difference between the MACD line and also the signal line. Okay, so you can see when MACD line and signal line getting very near, you will be see a very small body on all this histogram bar. Okay, yeah. So basically, this is the MACD indicator that we're gonna use identify where is the potential top and potential bottom. Okay, so how we're gonna do it is we not gonna use the crossing signal. Okay, but we're gonna on the MACD divergence. Okay, so like I said, MACD is a momentum indicator. Are trading along with the MACD. Try to look up to buy or across down. Itself, it also can tell us the momentum, whether the momentum is strong or weak, okay, by identifying the divergence. Okay, yeah. So how do we identify it? Okay, yeah. A bullish MACD divergence, we able to identify a bullish MACD divergence by looking at the low of the price, okay, and comparing it to the low of the MACD. So if the price is forming a lower low, okay, but the MACD is forming a higher low, that is a bullish divergence. Okay, bearish divergence is vice versa. It's let's not confuse you guys. We just jump into the picture. It will be much easier to look at the picture. Okay, yeah. So this is the bullish MACD. Look at the MACD one. Okay, so if MACD the low trading 0, we are seeing a higher low in the MACD. Okay, so you can see this is what happened to Inari. In early this year, we spotted a bullish MACD divergence, and from zero, which is telling us entering the below the zero level. So this is telling us that the buying momentum has been slowing down, and it could potential turning into a retracement or even a downtrend movement. Yeah, so very simple, right? Okay, yeah, so quiz time. Okay, so let's practice to look some of the picture right over here, whether you guys able to identify some of this as bullish divergence or bearish divergence, or there's no divergence at all. Okay, so first example right over here, Maybank. Okay, looking at this Maybank chart, would you able to find any divergence over here? Okay, let's count to 10. Okay, we count down to 10. Okay, so in this 10 seconds, you try to see if you're able to find any divergence. Okay, if you can found up bullish divergence, then you type bullish, or if you found a bearish divergence, you just type bearish. Okay, 9, 7, 5, 4, 3. If you're able to look into these timelines, okay, somewhere near the somewhere second half of last year, we are seeing move from 9 ringgit 70 cents and went all the way up to 12 ringgit 50 cents, the recent high. Okay, in February. Okay, how about Gamuda? Are you able to spot any divergence formations or divergence signal for Gamuda? Okay, count down 10 seconds. 10, 9, 8, 7, 6, 5, 4, 3, 2, 1. Okay, so for Gamuda wise, they are actually more than once. Okay, if you can see it. Okay, so the very first one over here, we can see that the share price is trading lower, but we are seeing a higher low in the MACD, which telling us that it's turning into an uptrend. Okay, but as the uptrend trading higher and higher, we are not seeing any pullback, and the buying momentum actually is off, whereby we start to see some slowing down in the momentum. Okay, but eventually the share price still able to trade higher. Okay, the MACD line wasn't the retracement, the pullback wasn't strong enough to go below the MACD zero level. Okay, and until right over here, we are seeing that the until right here we are seeing that the share price actually formed the peak at 5 ringgit 80 cents, and then even then traded lower. Okay, so this is the time whereby MACD, despite the early signal of slowing down in the momentum, the share price continued to trade higher. Then only when the MACD crossed below the zero levels, it started to move into a downtrend. Okay, yeah, so you can see even we able to identify the signal earlier. Okay, the uptrend, it could still continue to go on for some time before the before the change in the trend. Okay, so slightly after it moved below the 30 days moving average or below the zero level MACD center line. Okay, we are seeing the selling momentum actually slow down with the more flattish and also slightly higher low in the MACD momentum in the MACD low. Okay, we can see there's minor rebound. The selling candles has been weak, and suddenly we have an acceleration in the selling momentum. Okay, so you also realize that during this period of time, although we have the slowing down in the selling momentum, but the buying pressure is not there to drive the MACD to go above the center line, above the zero. Okay, so there was no buy signal. Okay, all the way until right now, whereby we can see another bullish divergence form. Okay, another bullish divergence form, and this round, the buying pressure is much stronger, whereby it able to drive above the center lines, and it traded from 4 ringgit 10 cents to 4 ringgit 40 cents from here. Okay, so what I want to bring out right over here is we cannot just depend alone on divergence signal. Okay, MACD divergence, whereby the MACD divergence, it give us a briefly idea on whether the momentum is weakening or the momentum remains strong. So when the momentum is weakening, if let's say the selling momentum has been weakened, but that is if there's no buying pressure to come in and drive up the MACD to go into above zero, telling us the buying momentum has been picked up and has been stronger. Okay, the bearish divergence, it could continue to drop. It could continue to stay losing momentum, but continue it still continue to trade lower. Okay, you get what I mean? It means that the divergence signal, it should serve as a reference to tell you that the momentum has been slowing down. It's the time to look at these stocks. Okay, but we still have to wait for the confirmation to tell us that the trend has changed before we're able to take any action. Okay. So last but not least will be the price chart pattern. Okay. For price chart pattern, we for chart pattern, on this one we have continuation pattern and also reversal pattern. So to match with what we have been we are focusing today, we are not gonna go through all the patterns, especially the continuation one, because what we want to do is we want to catch the bottom and also catch the top, right? So we will be focusing on the reversal patterns and we will be just doing some of it due to time constraints. Okay, so one of the most commonly seen chart pattern will be double top or double bottom. Okay, is one of the most commonly seen reversal patterns and one of the most easily recognized, whereby the double top it will looks like a M and also double bottom it could look like a W. Okay, and the confirmation will be at the breakout of the midpoint. Okay, so for example like this is the double top on the YTL, whereby this is the midpoint, the middle point of the two peak. Okay, so at the breakout of the middle point, that will be the confirmation of this double top and the continuation on the selling. Okay, so for those who want to trade on the target of the double top, you can use from the midpoint all the way to the highest points. That would be your target for your double top. Similarly, for double bottom, it looks like W shape. Okay, it looks like W shape, whereby this is the middle points. Okay, so similarly, target price for double bottom is at the breakout of the breakout of the midpoints. Okay, then we draw it up. Okay, so for 99 speed month, the target will be somewhere near the 4 ringgit, and at this point, it's still testing back to the midpoint and not seeing reaching the target of 4 ringgit yet. Okay. Another chart pattern that we're gonna look into today will be the head and shoulder and also the inverted version of head and shoulder. Okay, yeah. So basically, head and shoulder is like it has a three peaks or three troughs, where the middle one will be the highest or the deepest. Okay, yeah. So this is how it will looks like. Okay, so basically, it's telling us the losing momentum in the price action, whereby we can see. And initially, for the first upswing is still very strong. Then it had a pullback, a dip once. It tried to attempt to rebound, but the rebound swing has been short-lived and rejected with a very strong selling. Okay, so this become the key reversal signal that telling us that this stocks it might reverse. Okay, and from there it formed a lower low. Okay, which is pretty much on par with the previous shoulder. Okay. So instead of higher high, right now it become a higher low. A lower high already. Okay. So on the breakout of the connection of the low, okay, of the pullback low, it actually give us the entry to sell on the head and shoulder. Okay. Yeah. So similarly on the inverted head and shoulder, it will be the market has been selling down very steeply, and then it had an attempt to sell lower, but immediately it had a strong rejection, strong rebound from there, signaling us the potential reversal in the downtrend. Okay, confirmed by a higher low. and breakouts. Okay, like what we are seeing here on YTL Corp. Okay, yeah. So that would be the head and shoulder and inverted head and shoulder. Okay, so basically we have covered the three methods, which is the divergence, the indicator, and the momentum indicator, and also the chart patterns. Okay, but to execute them, um, do remember that all this that we have been talking about just now, they are only giving us early signals. Okay, to execute and do it correctly with a high winning probability, we have to combine it with either, if you really want to act on the early signal, you might want to combine it with the support resistance level, whereby if you are seeing the potential bottoming signal near the key supports, then you might want to take a chance to build in a small positions. Okay, because since we are seeing the slowing down in the selling momentum and it's trading near the support, the chances of bouncing off and rebounding from this level, it could be heightened, because uh, there are two reasons for it to rebound. One is the support traders who buy in for the support, and also the momentum traders who are buying for the reversal in momentum. Okay, or you can always act upon the confirmation on the breakouts. Okay, just like this, like price volume divergence for farm fresh just now. Okay, although we identify that the momentum has been slowed down, but we only act until the market tells us so, which is breaking below the supports. Okay, the breakouts of the low, telling us that okay, the low has been overtaken. It is really turning into a downtrend right now. Okay, or like bullish MACD divergence. Okay, bullish MACD divergence, whereby even though we spotted the higher low in the MACD, high low in MACD, okay, we might only want to engage when the share price started to move above the 20 days move average, or even right at this point whereby it sit back 20 days move average, start rebounding with the MACD turning above zero levels, telling us that this stocks has entering the uptrend cycle. Okay, or the double bottom upon the breakout of the midpoint, like we discussed just now, and also the midpoint, the neckline for the inverted head and shoulder. All right, okay. But one very important point when we are engaging with this all these methods right over here is we always want to set a stop loss. Okay, because when we are trying to buy at the so-called buy the bottom, we are actually trading against the trends. Okay, do remember that the trend is still trading on a downtrend, although it's losing momentum. But if there is no strong force, strong buying pressure that actually changing the trend, it could continue to trade into a downtrend, because as long there's no reversal signal, the downtrend will always remain as downtrend. Okay, yeah. So it's very important to set a stop loss, whereby if the rebound really didn't happen, at least we follow the stop loss cuts, and then we protect our capital for the next engagement. Okay, yeah. So in summary, we know that everyone of us wants to buy low and sell high, and that's the reason why you guys are here. But we really want to make it. We really want to do it with do it carefully, do it diligently. Okay, you can start with a consistent method. We have shared a few methods just now. Okay, just go ahead and test it and try it and try to master it. Okay, and always pair with a stop loss plan. Okay, and of course, if you when we are trying to trade the bottom, okay, when we are trading against the trend, and we have to accept that the downsides of buying low, trying to buy low, which the failure rate could be really higher compared to trading along with the trends, and the waiting time could be longer as well, because the momentum, it could still not there yet. Okay, but once you're able to build your mindset and also have a sound risk management with stop loss plan, all this, basically you are equipped and train yourself with the great 3 M's that we mentioned during the starting of our sections, and you're able to perform to buy low and also to sell high. Okay. Yep. So yeah, so that will be the end of my sharing section today. If you have any questions, do feel free to drop in the comments. Okay. Or if you enjoy our sections or you want to follow us, you can always scan this QR code to follow us on our Facebook, or you can find us at any of the social media channel below as well. Okay. Or you can always contact us through this phone number for either for accompanying or inquiries, or you're too shy to ask question right over here, you can always drop us a WhatsApp, and me personally will attend to your questions. All right. Okay. Yep. So if there's no questions, okay, if there's no questions, then we will end our section today. Okay. So if you have any questions, you haven't able to make it to put it up, okay, you can always feel free to contact us as well. All right. Okay. Thank you very much for your time to join our section today, and hopefully to see you on the next section. Okay. Thank you very much and have a good night, everyone. Bye bye.